Good evening, everyone. Let me start with something uncomfortable. Right now, somewhere in the world, there's probably a company quietly creating the next generation of millionaires, and almost nobody is paying attention to it. Not because the opportunity isn't there, but because most people are distracted. Distracted by trends, distracted by headlines, distracted by fear, and honestly, distracted by the constant noise of modern life. And that's exactly why extraordinary investment opportunities are so rare. Because by the time everyone agrees something is a great investment, the life-changing money has already been made. Think about that for a second. When Amazon first started, people laughed at the idea of buying books online. When Apple launched the iPhone, many believed it was too expensive and would never replace traditional phones. When Tesla was struggling through production issues, critics said electric cars would never go mainstream. But a tiny group of investors saw something different. They didn't just see products. They saw the future. And that's the difference between average investing and transformational investing. Average investors look at what is popular today. Great investors look at what could dominate tomorrow. Now, here's the fascinating part. Most people actually did hear about these companies early. They just didn't believe in them enough to stay invested. Because becoming wealthy through investing is not just about finding opportunities. It's about having the emotional strength to hold on to them while the rest of the world doubts you. And that is incredibly difficult. Imagine buying a stock and then watching it fall 30%. Most people panic. They assume they made a mistake. They start reading negative headlines. Friends tell them to sell. Social media tells them the company is finished. And suddenly, logic disappears and emotion takes over. But if you study the greatest wealth-building investments in history, almost every single one looked terrifying at some point. That's what nobody talks about. People love the success story afterwards. Nobody talks about the uncertainty during the journey. Nobody talks about the sleepless nights. Nobody talks about the volatility. Nobody talks about the moments where investors questioned everything. Because true wealth creation is uncomfortable before it becomes obvious. And this is why so few people capture a real 10-bagger opportunity. A 10-bagger is an investment that grows 10 times in value. That sounds incredible, right? But here's what's even more incredible. You don't need many of them to completely change your life. Sometimes just one exceptional investment held long enough can outperform years of saving aggressively. And yet most people spend their entire lives chasing small wins, trading in and out of stocks, reacting emotionally to market news, trying to predict short-term movements, constantly searching for the next hot thing. But wealth is rarely built through constant movement. It's built through patience. The wealthiest investors understand something most people don't. The stock market is not a casino. It's a machine that rewards ownership. Ownership of innovation, ownership of progress, ownership of businesses shaping the future. And over long periods of time, those businesses can create extraordinary results. But there's another reason opportunities like this are becoming harder to find. Today, information spreads instantly. The moment a company shows potential, hedge funds notice, institutions move in, algorithms react, and billions of dollars flood into the market within seconds, which means the window to identify undervalued opportunities is shrinking. Years ago, retail investors had more time to discover great companies before Wall Street fully recognized them. Today, the competition is global. Everyone has access to financial news. Everyone has investing apps. Everyone is looking for the next big thing. And ironically, that makes true long-term thinking even more valuable. Because while everybody is reacting to short-term noise, very few people are focusing on where the world will actually be in 10 years. That's where real opportunity lives, not in panic. Not in hype, not in daily price movements, but in understanding long-term human behavior, technology, and economic change. And tonight, I want to challenge the way you think about investing. Because the biggest financial mistake people make isn't losing money. It's underestimating how powerful a single extraordinary opportunity can become over time. History has shown us that massive wealth shifts happen during periods of transformation. The internet created fortunes. Smartphones created fortunes. Cloud computing created fortunes. Artificial intelligence may create the next wave. And somewhere inside these massive changes, there are companies that could become the next generation of 10-baggers. The problem is they won't look obvious today. They never do. Most people think a 10-bagger happens because someone got lucky. They imagine an investor randomly picking a stock, watching it explode in value, and suddenly becoming wealthy overnight. But that's not how transformational investing actually works. Behind almost every extraordinary investment is a pattern, a structure, a combination of factors that quietly build momentum long before the rest of the market notices. And once you begin to understand these patterns, you stop looking at stocks as random ticker symbols on a screen. You start looking at them as businesses, systems, and future economic engines. The first thing every 10-bagger has in common is that it operates inside a rapidly growing industry. This is critical, because even the best company in a shrinking industry will struggle to produce extraordinary returns. A business can only grow so much if the world no longer needs what it sells. But when a company sits at the center of a powerful long-term trend, everything changes. Think about how the internet transformed communication. Think about how smartphones changed human behavior. Think about how streaming completely reshaped entertainment. Entire industries exploded. And when industries explode, wealth follows. That's why great investors spend so much time studying the future. Not because they're trying to predict tomorrow's stock price, but because they're trying to understand where human behavior is heading over the next decade. Right now, we're seeing massive shifts happen in real time. Artificial intelligence transforming productivity, renewable energy reshaping infrastructure, digital payments replacing cash, healthcare innovation extending human lifespan, cybersecurity becoming essential in a digital economy. These are not temporary trends. They are structural changes. And structural changes create extraordinary businesses. But being in the right industry alone isn't enough. A company also needs the ability to compound revenue consistently over long periods of time. This is where investing becomes incredibly powerful, because compounding looks slow in the beginning and unstoppable later. RPMZ, PV, percent, and so 4, 6, or 10, 12, 14, 16, 18, 20, 20,000, mean 2053.30. This simple equation explains why some investors build life-changing wealth while others stay stuck chasing short-term gains. The magic isn't just growth. It's sustained growth. A company growing revenues at 25% annually for 10 years doesn't just become slightly larger, it becomes exponentially larger. And yet most investors underestimate exponential growth because humans naturally think linearly. We expect progress to happen steadily. But compounding doesn't behave that way. For years, growth can appear almost invisible. Then suddenly everything accelerates. That's why the early stages of great companies often look boring to the market. People dismiss them because the results don't seem dramatic yet. But under the surface, momentum is building. Customers increase, revenue expands, margins improve, market share grows. And eventually, the business reaches a tipping point where growth becomes impossible to ignore. Now, here's another characteristic of nearly every 10-bagger: exceptional leadership. Because visionary companies usually require visionary people. Leaders who are willing to think long-term while everyone else focuses on quarterly results. And that's harder than it sounds. Public markets are obsessed with short-term performance. Every quarter, companies are judged instantly. Did earnings beat expectations? Did revenue growth slow? What happened this month? What happened this week? But transformational companies are often built over years of experimentation, setbacks, and unpopular decisions. That means great leaders must tolerate criticism constantly. Think about how often innovative founders were doubted in the early stages. People criticized their valuations, their strategies, their products, even their sanity. But truly exceptional leaders understand something most people don't. Short-term discomfort is often the price of long-term dominance. And as investors, this matters enormously. Because when you invest in a company, you are also investing in management's ability to execute during uncertainty. The best leaders allocate capital intelligently. They adapt quickly. They build strong cultures. And most importantly, they maintain conviction during difficult periods. That's what separates temporary hype from lasting greatness. Now, of course, not every fast-growing company becomes a 10-bagger. Some fail completely. Some grow too quickly and collapse. Some lose competitive advantage. Some never become profitable, which is why investing will always involve risk. But the goal isn't perfection. The goal is asymmetry, meaning the upside dramatically outweighs the downside. Great investors understand they don't need to be right every single time. They just need a few exceptional winners that outperform everything else. One great investment can cover multiple mistakes, and that completely changes the way you think about risk. Because real investing is not about avoiding failure entirely. It's about positioning yourself for opportunities where success could be extraordinary. And the truth is, the market rarely gives those opportunities to people who only think short-term. The biggest returns usually go to investors who are willing to see the future before it becomes obvious to everyone else. Now, here's the part nobody really likes talking about. Most people don't fail in investing because they lack intelligence. They fail because they lack emotional control. And honestly, that's what makes investing so fascinating. Because the stock market is one of the only places where human psychology directly impacts financial outcomes every single day. People think investing is about numbers, charts, and financial statements. But the deeper truth is this: investing is a test of behavior, a test of patience, a test of discipline, a test of how you react when uncertainty appears. And this is exactly why most people never capture a true 10-bagger. Not because they never find one, but because they cannot hold it long enough. Imagine this scenario. You invest in a company you genuinely believe in. At first, things go well. The stock rises 20%, then 40%, maybe even doubles. You feel confident, excited, validated. Then suddenly the market crashes. The stock falls 30%. Headlines become negative overnight. Analysts downgrade the company. Social media turns fearful. Everyone starts saying the opportunity is over. And in that moment, something powerful happens psychologically. Fear becomes louder than logic. This is why so many investors sell winning companies too early. Because protecting short-term emotions feels safer than pursuing long-term wealth. But if you study the history of extraordinary investments, volatility is almost always part of the journey. Even the greatest companies in history experience massive declines at certain points. Amazon lost over 90% of its value during the dot-com crash. Netflix faced years of skepticism about streaming. Tesla experienced brutal volatility while trying to scale production. At multiple moments, investors believed these companies were finished, but the businesses kept growing underneath the noise. And that distinction matters enormously. Because the market and the business are not always the same thing. The market reacts emotionally in the short term. Businesses create value over the long term. Great investors understand this difference. Average investors react to price movements. Exceptional investors focus on fundamentals. And that requires patience most people simply don't have. We live in a world addicted to immediacy. Everything today is optimized for instant gratification, instant delivery, instant entertainment, instant feedback, instant success stories on social media. So naturally, people bring the same mindset into investing. They expect wealth to happen quickly, and when it doesn't, frustration begins. People jump from stock to stock, searching for excitement instead of consistency. But wealth creation is often incredibly boring in the beginning. That's the part nobody posts online. No one celebrates years of disciplined investing quietly happening in the background. People only notice the result at the end, and because they only see the outcome, they underestimate the process required to get there. Compounding is one of the most misunderstood forces in finance because it feels slow initially. For years, progress can seem almost invisible. Then eventually, growth accelerates so dramatically that it appears almost unreal. But by the time it looks obvious, most of the gains are already behind you. This is why patience is such a competitive advantage in modern investing. Not because patience sounds inspirational, but because very few people can genuinely practice it. The market constantly tempts investors emotionally. When prices rise, greed appears. When prices fall, fear appears. And both emotions can become destructive. Greed pushes people into hype. Fear pushes people out of opportunity. That's why successful investors build systems instead of relying on emotions. They focus on long-term strategy, research, conviction, and time horizon. Because time is one of the most powerful advantages an investor can have. A great company held for 10 years can produce results impossible to achieve through constant trading. And yet most people underestimate how difficult holding really is. Holding sounds easy in theory until volatility arrives, until uncertainty appears, until everyone around you disagrees, until the headlines become negative. That's when investing stops being intellectual and becomes emotional. And this is where wealth transfers happen. The market consistently transfers money from emotional investors to disciplined investors, from impatient people to patient people. And perhaps the most important lesson is this: temporary discomfort is often necessary for extraordinary outcomes. Every major opportunity in history looked uncertain while it was happening. If success were obvious from the beginning, everyone would already be rich. But markets don't reward certainty. They reward conviction backed by patience. And that is why so few people experience transformational wealth, because staying invested during uncertainty is emotionally difficult. But often that discomfort is exactly where the biggest opportunities are born. So where does all of this leave us? After understanding market psychology, compounding, long-term trends, and the reality behind 10 baggers, the biggest question becomes this: what happens next? Because every generation experiences moments where wealth shifts dramatically. There are periods in history when entire industries emerge, technology changes human behavior, and fortunes are created faster than anyone thought possible. The internet did that. Smartphones did that. Cloud computing did that. And now, once again, we are standing at the edge of another transformation. Artificial intelligence is changing productivity. Automation is reshaping industries. Digital finance is transforming transactions. Healthcare innovation is extending what humans are capable of. The world is evolving rapidly. And whether people realize it or not, massive financial opportunities are being created during this transition. But here's the important part. Not everyone will benefit equally, because opportunity alone is never enough. The people who win financially over the next decade will not necessarily be the smartest people in the room. They will be the people who develop the right habits early, people who understand financial literacy, people who invest consistently, people who think independently, people who can ignore noise while staying focused on long-term outcomes. Because information is no longer rare, that used to be the advantage. Years ago, investors with access to research and insider networks had enormous power. Today, almost everyone has access to information instantly. You can study companies from your phone. You can read financial reports online. You can learn investing for free from anywhere in the world. The barrier is no longer access. The barrier is discipline. And that changes everything, because most people still struggle with the same emotional patterns. Fear during downturns, greed during hype cycles, impatience during slow growth, and distraction during uncertainty. Meanwhile, disciplined investors quietly continue building positions, allowing time and compounding to work in their favor. And perhaps this is the biggest misconception people have about wealth. They assume wealth comes from dramatic moments. But in reality, wealth is often built through ordinary decisions repeated consistently for years. Investing regularly, learning continuously, avoiding emotional reactions, thinking long-term. These habits seem small individually, but over time they become incredibly powerful. And that's why financial literacy matters so much. Because once you truly understand how money works, your entire mindset changes. You stop seeing investing as gambling. You stop chasing quick wins. You stop reacting emotionally to every market movement. Instead, you begin to think like an owner of businesses, an owner of innovation, an owner of long-term progress. And that perspective changes the way you see opportunity. Now, does that mean every investment will succeed? Of course not. There will always be uncertainty. Some companies will fail completely. Some industries will disappoint. Some trends will never materialize. That's part of investing. But extraordinary wealth has never required perfection. It requires positioning. Positioning yourself in places where upside can become exponential if the future unfolds correctly. And historically, the people who achieve extraordinary financial outcomes are often the ones willing to believe in change before the majority becomes comfortable with it. That's why investing often feels lonely in the early stages, because consensus usually arrives after the biggest gains are made. By the time everyone agrees something is an incredible investment, much of the opportunity has already passed. And this is exactly why patience and vision matter more than prediction. No one can perfectly predict the future, but investors can recognize powerful trends shaping the future. They can identify businesses solving meaningful problems. They can study leadership, innovation, scalability, and market demand. And over time, those decisions compound, not just financially, but psychologically. Because every smart financial decision increases confidence, discipline, and long-term thinking. And eventually, investing stops becoming just about money. It becomes about freedom. Freedom to make choices without constant financial pressure. Freedom to create opportunities for your family. Freedom to live life on your own terms. That is the real power behind wealth creation. Not status, not luxury, not showing off. Freedom. And perhaps that's why the idea of a 10-bagger captures people's imagination so strongly. Because deep down, everyone understands that one extraordinary opportunity can completely alter the direction of a person's life. One investment, one decision, one moment of long-term conviction, and maybe somewhere today, another opportunity like that already exists. A company quietly building the future while most people ignore it. A technology people still underestimate. A shift the market hasn't fully priced in yet. The challenge is not whether opportunities will exist. History guarantees they will. The real challenge is whether people will have the patience, discipline, and vision to recognize them before the rest of the world finally catches on. Because once everyone sees the opportunity, it's usually no longer extraordinary.